Welcome to the Ontario Mortgage and Real Estate Insights podcast, where we delve into the latest developments, trends, and regulatory changes affecting the real estate industry. I'm your host, Steve Hamoan, and today we're diving into some significant news regarding the Bank of Canada's monetary policy and its potential impact on the housing market. This week, all eyes are on the Bank of Canada, as forecasters anticipate a significant move in interest rates. The central bank is expected to announce a supersized rate cut, possibly slashing its policy rate by half a percentage point. This expectation comes on the heels of Statistics Canada's report showing that the annual inflation rate in September dropped to 1.6%, falling below the Bank of Canada's 2% target. Nathan Jansen, an assistant chief economist at Royal Bank of Canada, noted that the latest Consumer Price Index report bolsters the case for a substantial rate reduction. He pointed out that the economy seems to be underperforming, which necessitates a reduction in interest rates to stimulate growth without stifling it. According to Jansen, the current interest rates remain in restrictive territory, making this a pivotal moment for the central bank to act. The Bank of Canada has already lowered its key interest rate 3 times, bringing it down to 4.25%. Despite these cuts, the Canadian economy is showing signs of strain, with real gross domestic product shrinking on a per capita basis for 5 consecutive quarters. The labor market is also experiencing a downturn, with the unemployment rate rising to 6.5% in September, a full percentage point higher than a year ago. Economists are predicting that the Bank of Canada will deliver back-to-back substantial interest rate cuts in October and December, potentially reducing the policy rate to 3.25%. The Parliamentary Budget Officer has even projected that these cuts will continue into next year, aiming for a policy rate of 2.75% by the second quarter of 2025. Carl Gomez, the chief economist at real estate data company CoStar, highlighted that Canada's real interest rates, adjusted for inflation, are notably higher than those in other countries. This discrepancy adds further pressure on the Canadian economy, which is already weaker compared to the United States. Gomez suggests this is a clear indicator that the Bank of Canada is lagging behind in its monetary policy adjustments. While the interest rate cuts are expected to invigorate the housing market, there are concerns about the potential for inflation to rebound. Despite an increase in home listings, demand remains subdued. Gomez describes the current climate as a buyer's market, where house prices are being held down rather than climbing as they did before the pandemic. Jansen also pointed out that although lower interest rates could improve affordability, many prospective buyers still face challenges, particularly due to high unemployment rates among younger demographics. This softening labor market is likely dampening housing demand, especially among first-time homebuyers. The Bank of Canada's upcoming interest rate announcement on Wednesday will be accompanied by its quarterly monetary policy report, which will provide new economic forecasts. This report will be crucial in understanding the central bank's outlook and future policy direction. Let's shift our focus to a fascinating comparison between real estate options in Mississauga and Bracebridge, Ontario. If you're in the market for a new home, you might be wondering what kind of property you can get for $1 million in these 2 distinct locations. While both offer unique advantages, they cater to different lifestyles and preferences. Starting with Mississauga, the real estate market has been experiencing a bit of a lull. In September, the average price of detached homes in the city dropped by 6% to $1,161,044. Despite this decline, prices remain steep for many first-time homebuyers. However, for those with a budget of around $1 million, there are options available, such as a charming townhome located at 1185 Lower Village Crescent in Lakeview. This 3-bedroom townhome offers approximately 2,100 square feet of living space. The property features 9-foot ceilings and an updated kitchen equipped with quartz countertops and stainless steel appliances. The spacious dining room opens up to a fenced backyard, perfect for entertaining or relaxing. The living room is adorned with a large window that offers a serene view of the backyard. The primary bedroom is a highlight, boasting a walk-in closet as well as an additional second closet. It also includes an ensuite bathroom with a glass door shower and a separate bathtub. Conveniently located within walking distance to Lake Ontario trails and shops, this condo townhouse is listed at $999,900, with monthly fees of $148. Now, let's head north to Bracebridge, where your $1 million can stretch a bit further. At 18 MacArthur Drive, you'll find a 4-bedroom home with 2,600 square feet of space. This property boasts 60 feet of green space in the backyard, offering a peaceful retreat from the hustle and bustle of city life. The home features a recreation loft, perfect for hosting guests or creating a cozy family space. The kitchen is a chef's delight, featuring quartz countertops, stainless steel appliances, and a 6-burner gas stove. The landscape backyard is equipped with a fire pit and an adjacent patio, ideal for enjoying those warm summer evenings. This Bracebridge gem is listed for $975,000. In summary, while Mississauga offers proximity to urban amenities and a more vibrant city life, Bracebridge provides a more serene and spacious living environment. Both have their own unique charm and advantages, so the decision ultimately depends on your lifestyle preferences and priorities. That's all for today's episode of the Ontario Mortgage and Real Estate Insights podcast. I hope you found today's discussion on interest rate cuts and real estate comparisons insightful. Remember, staying informed is key to making well-informed decisions in the ever-evolving real estate market. Thanks for tuning in, and I look forward to having you join us next time. Until then, take care.